Diane King Hall next to me to take a look at some of the names here, and that would include a name like Netflix, I mentioned briefly.
Yeah, look, Netflix shares moving a little bit higher off of Loop Capital, changing its tune on this one. And honestly, it's kind of a mea culpa moment here with the analysts becoming bullish and admitting that the prior look on this was wrong from their point of view. So Loop Capital has upgraded Netflix to a buy from a hold. Their new price target is $1,350. He says that the prior downgrade of the stock was a mistake. He says our Netflix downgrade in mid-December with the stock in the low 900s was wrong. That is a quote. But after a strong first half, the stock has tread water over the past quarter. So I think he's trying to, kind of couch that. But look, this stock has been an outperformer year to date, up more than 30% so far this year. And he says that, look, Netflix has won the streaming wars. That's evident in terms of the strong performance against other streamers in the space. He talks about the content slate recently, exceptional engagement. He called out there the content he pointed to, Squid Game Season 3, Wednesday Season 2. A lot of people into that one. K-pop Demon Hunters, that's one that he pointed to. A lot of people have heard a lot of chatter around that one. So he talked about each dollar of content essentially generating more revenue. So that's a tailwind for the company. And he sees stronger earnings and a stronger free cash flow outlook from here, raising Q3 estimates, and he's expecting Netflix to lift its full year revenue guidance. So now, to be fair, he says at the time of the downgrade, Netflix had guided for between 11 to 13% revenue growth in 2025, and now they've been guiding for between 16 to 17%. But he also sees investors as overall too cautious on rivals. But again, the view from Loop Capital now, Netflix has won the streaming wars, and they have strength with their sticky customer base, not just here in the U.S., but globally, and their scale of content. And he also talked about the tech advantage there.
Look, I mean, Netflix has always been the behemoth, and will continue to follow the Warner Brothers story, too. A lot in streaming, a lot in all of these things. But Netflix, $1,350, the new price target there.
Yes.
How about Workday? I mean, in the top 5 movers on the S&P, I mean, Netflix and Workday are among the S&P best today.
Yes. So Workday needed this win today because before today's move, that stock had been a big underperformer year to date. So this helps it recover some ground. Still underperforming the S&P 500 year to date, but a big tailwind here. Here's the catalyst. There's a couple catalysts here. Elliott Investment, activist investor, disclosing this $2 billion stake in Workday. They put out a big, statement about this. They expressed confidence in the C-suite, the CEO, the CFO. They believe in Workday's multi-year plan that was unveiled at their analyst day on Tuesday, and say that it will create long-term shareholder value. Another catalyst, the board of Workday has approved this $4 billion increase in its buyback program. They plan to repurchase about $5 billion in shares through fiscal 2027. And here's another piece of the puzzle here for Workday. They announced this $1.1 billion acquisition of Sana. That's an AI workplace tools developer. So they're essentially, the goal of that is to expand in AI-powered agents that can automate those repetitive tasks, those things that people just don't want to do. You can search data sources and create presentations and documents, so it kind of takes out some of those pain points here. The context, of course, Nicole, as you know, to go back to how we got into this, the stock has been an underperformer year to date. Some of that concern has been how the macro environment would weigh on IT spending, and so Workday had been dinged as a result of this, but today it's got tailwinds.
Yeah, and I saw Elliott Management. I just saw CNBC a short time ago with that investment there, which you mentioned, 7% higher. It's been an incredible mover today. And last but not least, what about Zillow? We got in a lot of housing news. We'll be talking to Dolly Lenz and Jenny Lenz shortly.
Yeah.
But what are your thoughts on Zillow here?
So Zillow, just really quickly on Workday, a couple analyst moves. Piper Sandler upgrading it to neutral, Guggenheim upgrading it to a buy. As far as Zillow, Bernstein is turning more bullish on this one. The call today from them, Bernstein is upgrading it to outperform. They've lifted their price target to 105. This is what they're flagging. They see better monetization and operating leverage. Even though there's been some challenges, obviously, in this space, which you pointed to, and transaction volumes are low, but they highlighted Zillow's earnings momentum. And so they think overall, though, falling rates, because the expectation is we will see rates decline, could unlock upside, especially, with the potential to see more volume here. And they think that could be a tailwind for Zillow. So you see shares moving higher today.
All right, Diane King Hall, thank you so much. Great to see you. Good names to watch, the movers you don't want to miss.